Good evening, everyone. I hope we are having a wonderful Tuesday, December 12th. We're going to be looking at what occurred in the market over the past 2 days because I did not post a video yesterday, and I do apologize for that for anybody that does actually look forward to watching my videos. If not, then I do appreciate it if you do watch them and don't care for the market. Either way, if you're here to learn or here to just understand what's been occurring in the market over the past year and a couple of days, because I'm sure anybody that does have a 401k or a portfolio of sorts, wonders why we make moves the way we do. Well, let's review what happened yesterday. Reason for my absence or lack of video making is due to work. It's work related. I've just been real busy and pretty exhausted, so I did not have the mental energy or capacity to make a video yesterday. I did trade. I did not trade well yesterday, as for some it was just a hard day for me to trade. It should have been easy because every push up was an opportunity to sell in each and every period after E period made a new low right here where I have highlighted that E period, that 30-minute candle. Once it made a new low, you know, and every pop up was an opportunity to short. I had decent entries on most of my positions yesterday, but I had my stop too tight, so I got stopped out a lot and ended up taking pretty hefty loss on the day across three of my accounts. But overall, let's back it up a minute. I believe I said on Friday, before we come into Monday, right? I believe I said on Friday that the market had came into a balance. We were in a 3-day balance, and my balance area was going to be the low of day from the 30th, where we had that big trend day up, and the balance high would have been the 1st of December. That would have been at my balance high. So this whole range would have been one big balance area. Otherwise known as channel, however you want to review it. I say balance. Some people say channel. So in these brackets here, right? So market was trying to go up. We had gotten above the 200-day moving average. We gapped lower on that Friday, filled the gap, battled the 200-day moving average, and I said on Friday that 2 days, 3 days doesn't make a market above the 200-day moving average. We need to find acceptance of higher price above that 200-day moving average. If we did not, then the chances of us rolling over, getting back below the 200-day moving average, and taking back the set of single prints, which is where a what am I doing here? Demand zones would have been, right? You would have found buyers, or you would have hoped to have found buyers in these sections. Uh, you would have demand would have been in these regions, right? That would have been single prints. Had we held in those areas, you would have seen, all right, it was just weak longs getting out the market, selling out other positions, which caused the market to roll over. Of course, shorts pushing it down. And then, you know, if we held them like we did here on Friday, then the likelihood would have been to get back above the 200-day moving average and keep on rolling. Well, on Monday, we didn't necessarily do that. We battled the 200-day moving average. As you can see right here, indicated by this red stair step, that's the 200-day moving average. We battled it on Monday, couldn't get above it. We rolled over. We eventually took out the day's low. Some people may have called this whole region balance from this day's high to this day's low. They would have called it a 2-day balance. I'm calling it one large 3-day balance. But for some people, the daily went down as we took out that low day. I need to do something here because it is bothering me. Appearance, where's it at? Let's turn this off for now. Let's turn them off completely. Sorry. That the way it's moving around is not okay with me. All right. That way you can see exactly what I'm talking about. All right. Anyway, so We couldn't get above the 200-day moving average right up here. We finally rolled over, started making new lows. We took out that low of day on Monday. Some people called it daily down. I was still saying it's balance. And then, you know, it's an art, not a science. So you could have been thinking that was big balance up here, or been with me and said that this was all one big balance. For me, it was all one big balance. Um, we finally took out that daily low from Friday. We've moved into this large set of single prints here, where you could have found buyers and or demand in this region, right? Uh, like we did on Friday. We did not. There was enough supply to fill that set of single prints. So we filled that set of single prints, uh, pushed into lower into the next set of single prints and or where the other parts of demand was. Large set right here. Very large position there. And as you can see, as we push lower into the day, we kind of held. We put our low in K period. Curly put its low in, middle of that distribution, or middle of that set of single prints, right in there, right? That's where the low of day was from Monday. And yeah, we attempted to hold inside that set of single prints. We did not uh, coming into today, but Monday, we all it was a weak trend, but a trend day down. Eventually, we create a set of single prints in I period. So supply in this area that I have marked at 4,005 to 4,006 in that area, you could have found supply, and that's what happened this morning. As I zoom in here, we got up into that supply zone. As little as it is, the set of single prints here acted as an area where supply was to the tick in periods high, or where the single print started from yesterday at 4,550. We got there in A period today and then sold off. We took out that low of day from Monday. We continue to rotate down lower, so showing that supply is in the market by taking out another daily low. Um, so the market's attempting to trend lower, setting lower highs, lower lows in the intraday, pushing lower. We're still below the 200-day moving average. We never came back up to test it. We couldn't even get above the smallest set of single prints all year to get up there and test it, right? So showing that there's supply from maybe these longs that got trapped up here, showing that there's supply in the market, we rolled over. Eventually, we filled this large set of single prints that was remaining. So from here to here was the remaining bit of the demand zone, right? We finally filled that demand with supply in B period. We got it, filled it, and created a supply area at that point. So in here, we created supply, another set of single prints, as we say in the market profile world, single prints, intraday gap, um, or supply where sellers are active, right? And you can see that as C period pushed up, D period, and E period pushed up, we never got into that area as supply was overhead. We did, however, get into this lower distribution from the 30th. I just highlighted it. The lower distribution is that this zone right in here. We got in there and then kind of traded in that area for a few time frames, right? Uh, Single prints we held. We attempted to find acceptance in that lower distribution, and then eventually began to roll over and take out those two low days that were right next to each other, and then that weekly low. So we took out the weekly low, putting the weekly into a balance. While all this was occurring, right, we have this set of single prints. Sellers are up here. So each push up, the ebb and flow trade was to the short side. There was no reason to get long, even though I did attempt a long against this high node area, high volume node in this section here. As you can see, right before that big push up on the 30th, I was thinking in F period if we pulled to that area because volume and tempo was slow at the time. Maybe they wanted to play games at this high volume node and then this set of this area of supply up here. So I bought here, had my stop where it filled or basically below um, that low right there at 48. Had my stop there, and I got stopped out as we found some more supply. So we attempted to go trend again in F period, didn't quite get it. G period, I had a beautiful short put position put on after we set a new low on the day in F period. I got out of that long, waited for us to bounce back up, and then I took the short, seeing that we were going to attempt to go and get these two low days and then that weekly low. I actually have the video footage right here pulled up for it, and you can kind of see what my thought process was on it. Let me back it up a little bit, and then I can kind of guide you guys through my trade. So I'd gotten stopped out, and you can see me take that trade earlier on. I'd let's see, where was it at? I think right in here is where I decided to get, yeah, right in here. You can see I'd gotten long at 52.25. My stop was right around 48. So I was looking at this demand zone right in here, right? Thinking because we bounced once, twice in around that area, I figured maybe we would bounce, have a good opportunity to rotate up. As you can see by this yellow line up here, point of control was up here, the POC mean was up here at the time, and then boom, we broke the low of day, flushed some stops out, and I got stopped out of my position. So after that happened, I decided to get short, as it looked like we were going to create a set of single prints or a short position. And then right in here, I decided to get short. Two lot 48.50 on the push up, and I was kind of thinking if we get back inside of this range here or inside of this range here where 53 or 52.75 was, I would get out of my position because at that point then the likelihood of us seeing the lows were kind of slim compared to going back up here to where point of control was. Uh, so I'm fast forwarded a little bit. I actually had a two lot on. I took one of them off for a nice little gain. Wasn't much. I think it was 2.5 points I took it off for. And then you'll see me throw on another one lot. So now I'm short two again. Average price of 49. I decided once we got back below 49, I was going to add, so I did. So now I'm short a four lot, as you can see by my positioning up here. My target areas were the low of day and then those two daily lows. Had I spread it out a little bit more, I would have put a uh, buy order back right here at the weekly low, but I felt odds were really good to get those low days. I didn't know how much we would get into that weekly low considering we held it two times. I almost get stopped out. I decided to move my stop up just a hair to 53.50. I had it at 53, which is a good thing because once we pushed up to 53, we had brought POC down, point of control down at this point, to that low. And I was just kind of, let's see, yeah, right in there, you can kind of see, I looked at it right there, boom. And I was like, man, I'm 53's right there. I'm gonna get stopped out. My stop is at 53.50, just two ticks above. Um, and I never did as supply was still pretty strong. We push back lower, push back lower, push back lower. I get out of one of my positions at the low of day right there. Boom. Get out of that position. We push lower. My targets are below. We continue. And I'm in this trade for a while. Could I have taken other trades or added to the position? Yes. But I was comfortable with the three lot that I had on. I didn't want to add any more. And boom, I get filled right there. Hit the targets. I get out of my position. Pretty good day. Cannot complain. So that's what I did during these time frames. So that's a bit of a live trade example of how I used the market generated information to help determine what to do for the trade. So we rotate towards the lows, we take out that weekly low, put the weekly back into a balance. We attempted to go trend in J period, K period filled that set of single prints, and then there was a little bit of a short covering rally in L and in M period, but we still hold the set of single prints up here in B where the supply is located. So we're going to go ahead and put in our destinations. ES, we go out with a double distribution um, because we only have one set of single prints. So all of A's range is one distribution. So A's high to B's high, or excuse me, A's high to A's low is all one distribution. And then from C's high to the day's low is another distribution. We close back inside that weekly balance or inside that weekly range. So we are at a bottom of a weekly balance, and I'll show you that here in a minute on the larger time frames. For now, let's go ahead and put in our destinations. 76, what is that low? 76.75. Before I do all that, let's go ahead and put it back to snap. Boom. All right. No way, this is a little bit easier. Do plan on in the future making a video on the terminology that I use and kind of the definitions and meaning behind them. That way, whenever anybody that does watch my videos has like any question about what this means or what I'm looking for with this. So for example, single prints fill here, that would just mean that there's supply there, and once it fills that supply, uh, then with demand, then that means the likelihood of getting back into this upper distribution is good. That's how I would look at it. 96.75. This is where single prints would start, or the top of the lower distribution. And if anybody is interested in learning more about the market profile, I have a great mentor and uh, Discord room that I'm a part of. I recommend going and visiting Paul Asmar's YouTube channel as well as his Discord if you are interested in learning more about the markets and how to trade them. He is a wonderful coach, teacher, mentor, however you want to look at him. The man knows the market very well, and I wouldn't know half the things I know today without him. So huge shout out to him. I hope you guys do at least go give his channel a look. Uh, that's not the high day, low day. Go give his channel a look, maybe subscribe to it, tell him I sent you. And then we have our high day up here, where the smallest set of single prints are. Kind of like the world's smallest violin. Well, this is the world's smallest set of single prints. So that's what our intraday looks like now. So we go out with today's high, set of single prints, double distribution day, and the low of day. So if we open up tomorrow in the lower distribution, because at this point we are one time framing down on the daily, I'm going to say the daily's one time framing down now that we've taken out this low. Daily's one time framing down now. Because we've done that, if we open up in this lower distribution, then we look to take out today's low at 39.2150, get that low of day from the 17th, November 17th at 39.1375. Then next target would be 39.0450. If we continue from there, we would start to get into that gap from gap below. And I remember saying last week that all gaps eventually get filled. Do we come and fill this gap at 85 or 38.70, 75, fills at 38.25, 75? Do we fill that gap? Are we finding rejection of higher prices above the 200-day moving average, which has been the trend all year long? That's the question. Now, if we open up in this lower distribution, we can't take out today's low day, then you'll look to fill this set of single prints and rotate up into the upper distribution, and then maybe get this, take back a little bit of this sell tail and this set of single prints here. If we did that, then we'd be putting the daily back into a balance. So let's go look at the larger time frames. Alrighty. For some reason, it did not save this, so let me change that. Take off extended hours. All right, monthly. Let's look at the monthly. I've been calling the monthly balance. We never got above that high I was talking about at 41.37.75. We did, however, hit that trend line, got near that supply, the top of the balance area, and we're starting to find a little bit of rejection, some sellers in this region. But the monthly still on a balance. Weekly went from trend up, one time frame and up, back to balance. So now the weekly in this range here, I'm gonna highlight it for you guys. Here to here is all one range. All one big balance in this range right here. We're gonna call it a 4-week balance now. 1, 2, 3, 4. 4 weeks of balance. So we're near the balance low, which we're going to use the balance low as week of the 14th at 39.13.75. So if we take that out, then maybe the daily or the weekly will go from balance to down. So we're going to say, or maybe we'll start to encompass this big day or big week here. But for now, balance on the weekly, near the balance low. So that's what I mean by balance or channel, however you want to look at it. So look to see some consolidation in that area. And then the daily, let's go to the 10-year. You can see trend line, lower highs, lower lows, lower highs, lower lows. Potentially another lower high and rejection of the 200-day moving average. Do we break this trend line up here and come back and visit the 50-day moving average down at 38.41 right down here? If we do that and get below it, then we potentially set new lows on the year before the year ends. I'm not looking for that, but it's a possibility. I expect us to kind of consolidate going into the new year, but I could be very wrong. This market could break down. Who knows? Anything's up for grabs. This market is very emotional with the short-term traders. One thing I'll say is there hasn't been any uh, long-term money really getting out of their positions, I would assume, because volume's been so light. So with that being said, daily is now down, weekly is balance, monthly is balance. Right now we took out the 20-day moving average. We're looking to attack the 50-day moving average down here. So with all that being said, I hope you all have a wonderful day. Thanks for watching my videos. If you could, please leave a like. If you are new, please subscribe, and we'll catch you guys in the next one. Hopefully, we'll be a little bit more consistent with the videos as I am once again in my peak season at work. So I'm gonna do my absolute best to give you guys updates, and then eventually come out with that video breaking down more of the technical side of my terminology and words that we use in the market profile world. Hope you all have a wonderful day. Once again, thanks for stopping by. We'll catch you in the next one. See ya.